Good afternoon, Ms. Iska. My name is Gebril from class 11-5, and today I will be explaining to you the 8 steps of the accounting cycle. So what is the accounting cycle? The accounting cycle is the holistic process of recording and processing all financial transactions of a company, from when the transaction occurs to its representation on the financial statements to closing the accounts. This cycle consists of 8 steps, and once an accounting period ends, a new one begins and the process starts all over again. The first step is identifying the transactions. All transactions must be accounted for, whether they involve a sale, a refund, inventory order, debt payoff, asset purchase, or other activities. The second step is recording journal entries. After a transaction is identified, a record of it needs to be created. This is done through a journal entry. The journal functions as a running record of a business's financial transactions. It states the date of each transaction, how much money was involved, and also the accounts that are affected. The third step is posting to the general ledger, which is an old-fashioned term for a record-keeping system for a company's financial data. In the general ledger, all accounting activities are summarized and sorted into one of the following subcategories, such as assets, liabilities, owner's equity, revenues, and expenses. This makes it much easier to track finances and identify, for example, how much cash a company has, how much it's spending, or how much it owes. The fourth step is preparing a trial balance. A trial balance is a bookkeeping worksheet that compiles the balances of ledgers into debit and credit account columns. With the data laid out this way, it's easy to see if the numbers match up. If they don't and there are more debits than credits or vice versa, there is an error. The trial balance is usually created at the end of an accounting period. The fifth step is analyzing the worksheet. In this phase, worksheets are investigated for any errors. If the trial balance isn't balanced, the person keeping the books must get to the bottom of the error and adjust accordingly. The sixth step is making adjustments. If any errors are spotted, adjustment entries must be made to fix them. The seventh step is generating financial statements. These formal records of a company's financial activities must follow a specific template. In most cases, a company's financials are communicated in the following 3 statements. The first one is a balance sheet, where a company's assets, liabilities, and shareholder equity are reported. The second one is an income statement, where a company reports its revenue, income, and expenses over a set period. The third one is a cash flow statement, which details how cash entered and left the business during the reporting period. The 8th and final step is closing the books. After the financial statements are completed, it's time to close the books. This can be a good time to reflect and compare the firm's performance with other periods and also other peers. Further analysis could reveal areas for improvement and highlight where the company has done well. The closing of the books also marks the start of the next accounting period. The cycle is complete, and it's time to begin the process all over again, starting with step 1. And that is the 8 steps of the accounting cycle. Thank you so much.